evening and welcome back to another episode of Chat with Brandy, where we talk business and personal finance, taxes, and how to make money doing what you love. Thanks for tuning in for another episode. This is episode number 18. I am your host, tax preparer and bookkeeper Brandy Miron. It is almost February and I can feel it in my bones. Tax season is coming. So I wanted to make this video and the related blog post or show notes that will serve as a guide for you for the upcoming tax season. So in order to have sort of a drama-free tax season, there's always like a set of questions that I like to answer. So the first one is, when should I file? So the first step to a successful tax season for you is to prepare early by organizing your paperwork and documentation well in advance of the tax deadline. So for most people, the tax deadline is April 30th of 2019 to file your 2018 tax return. And that is also the deadline for everyone if you owe any tax, unless you're on an installment plan, okay? If there's a chance that you owe taxes, I would always recommend trying to get your return filed at least a couple of weeks in advance of the deadline in order to make sure that Canada Revenue Agency can assess your return before the payment is due. If you file late and you end up owing taxes, you'll pay interest and penalties on your outstanding tax balance until you submit your payment to CRA. So always like to avoid that. If you have self-employment or rental income to report, your return isn't technically due until June 15th, but your tax owing is still due April 30th. So I always recommend to stick to that earlier deadline. Right now, so the filming of this, it is January the 29th, and Canada Revenue Agency is currently closed for e-filing of any tax year. They will reopen around February 19th for not only previous years, but for the 2018 tax season as well. So this will be the earliest that you can file your 2018 tax return. But I would only recommend filing that early if you are 200% sure that you have all of your T-slips, because the T-slip deadline is not until February 28th. So it's possible that you could have some stragglers out there and accidentally file without including them. Other slips that may even come a little bit later than February 28th are RRSP contributions, because as I talked about last episode, the RRSP deadline is March 1st, so they won't send those out until a little bit later. And then if you are in the construction industry and you've done any subcontracting for anybody, you will likely get a T5018 slip. And those aren't technically due until 6 months after the payer's year end. So you might not get those until like June. So to combat that, I would always recommend tracking your own income in terms if you're doing subcontracting work for anybody else, and then you don't have to worry about waiting on that other person. Okay, so the next question that I answer a lot in regards to filing personal taxes is, do I have to file a tax return? So technically the answer is you only have to file if you owe taxes, okay? So that being said, it's still good practice to file your tax return every year for three main reasons. So the first one is that if you don't owe money, there's a good chance that the government owes you a refund back. So why would you not take advantage of that? I'm sure there's ways that you can think of to spend that refund. The second reason is that Canada Revenue Agency uses your tax return to assess whether you qualify for various benefit programs such as GST credit, Canada Child Benefit, Alberta Carbon Levy Rebate, Working Income Tax Benefit, and more. And I will list the link for all of the benefits that you may be entitled to on the blog post. The third reason is if you are applying for any type of credit, so like like student loan, car loan, personal loan, a mortgage, credit card, any kind of support or subsidy program, so childcare subsidy or rent subsidy, you will need to supply a recent tax return. So that's the third reason. Okay, what deductions can I claim? So I have a little handy list here. Now, here in Alberta, there hasn't been a whole lot of changes in what deductions can be claimed since last year. There were a lot of changes in 2017, but this year there's not a whole lot. Most of the tax changes that have been rolled out this year are regarding the corporate side of tax. So we can cover that in a separate video, but for this one, these are the ones that are still in place for this year. So charitable donations, political contributions, both on the federal and provincial side, medical expenses, and there are a couple of new ones in there. So medical expenses, you can now claim most fertility treatments, which is awesome. And you can also now claim service animal costs if you use a service animal for psychiatric reasons. So before it was only if you were blind or deaf or had another severe physical impairment, and now they recognize that service animals are helpful in things like PTSD. So yeah, there's been an expansion on that part, which is great. Post-secondary tuition, interest paid on a student loan, investment carrying charges and interest. So that one is if you have a non-registered investment account and you pay like a financial advisor fee, or if you pay interest on a loan that you took out for investment purposes, you can use that as a deduction. Adoption expenses, northern residence deduction, that is for our friends who live up north, like Fort McMurray and even north of that. Moving expenses, that one is only if you are moving over 40 kilometers specifically for a job or post-secondary education that you've already been enrolled in, or that job that you've secured. Childcare expenses, union dues and professional fees. First-time home buyer credit is a really good one. The teacher and educational assistant program is still in place. If you're a teacher or an educator and you have to purchase school supplies for your classroom and you don't get reimbursed, you can get a credit for that. Just keep your receipts. There's a whole bunch of disability related credits for people with certified disabilities, so they have to be certified by a doctor, and those who care for them, including home accessibility expenses. So if you do a renovation to your house in order to make it more accessible for somebody who has a physical disability, such as a wheelchair ramp or a stair, the word is escaping me right now, like one of those stair chairs, there is a credit for that. There's also eligible dependent for single individuals who have a dependent. So most typically that is a single parent with a child. And then the last one here is if you're a volunteer firefighter or a volunteer search and rescue person, then there is a credit available for that. If you are self-employed or you have rental income, or your employer gives you a T2200 form so that you can claim employment expenses, there's a whole other menagerie of expenses that you can claim, and I have talked about them in length in episodes 2, 3, 5, 10, and 11. So check those episodes out. There's also some very handy checklists on my website that list all of the common expenses for those types of people. Okay, so the next question that I answer a lot is, what tax bracket am I in? So the percentage of tax that you pay both federally and provincially depends on what income, like how much your income is. It used to be in Alberta that it was a flat 10% rate for everybody. That changed 2 years ago, as I'm sure a lot of you know. But so now that it's on a progressive scale, just like it is federally. Each of the provinces has a different progressive tax bracket structure, and they're all different from the federal government as well. So the tax brackets increase a little bit each year based on inflation. So that means that every year you can make a little bit more money and stay in the same tax bracket. Hopefully you can see that. Okay, so I'm not going to go through all the numbers here. I don't want to bore you, but this chart will be up on the blog post later this week. So here are the 2018 numbers. So federally, if you make less than 46, so you individually, this isn't family income, this is each person individually, okay? If you make $46,000 or less, you are in the 15% tax bracket, which is the lowest one. And then there's all these little in-betweeners. And then if you make over $205,843, you are in the 33% tax bracket on federal. That's the highest. On the provincial side, 10%, so what a lot of Albertans are used to from a few years ago. You'll still be in there if you make under $128,145, and then in betweeners. And then when we get to the highest tax bracket, which is 15% in Alberta, you would have to make over $307,548 to be in that tax bracket. And so when I was talking about how you can make an RSP contribution to lower your tax bracket, that's what I meant last week. Is let's say you had just squeaked over the $305,000 mark, you could put $2,548 into your RSP, and then you wouldn't have any of your income taxed at that 15%. Okay, how can you be prepared for tax season? So lucky for you, I have prepared a bunch of tax checklists that are on my website. And again, I will post these in the blog, but if you want to go check those out now, you certainly can. They're under resources at booksbybrandy.ca. So I would always start with a personal tax checklist and go through that, and it will tell you if you need any of the other checklists based on your tax situation. So the other ones that are available would be the self-employment tax checklist, rental property tax checklist, employment expenses checklist, and the foreign income reporting checklist. And as always, if you have any questions at all, please feel free to reach out to me. I love talking about this stuff. And that wraps up this episode for this week. I hope you guys have a wonderful week, and I will see you next time.